Bidenomics is getting a lot of attention in the news and government websites. They say it's helping the economy by starting from regular people and working its way up. But who does this actually help? And who is it really aimed at?
Bidenomics is about building an economy from the middle out and the bottom up, not the top down. First, making smart investments in America. Second, educating and empowering American workers to grow the middle class. And third, promoting competition to lower costs to help small businesses.
Bidenomics is a fresh term that describes the president's economic policy and its impact on the economy. It's at the center of a heated debate about whether Bidenomics is beneficial or harmful to the middle class and the economy. This debate involves two groups: those who back Bidenomics.
Below 4% for the longest stretch in 50 years. Inflation is half of what it was a year ago. Wages are going up, beginning to outpace inflation. Combine this with the fact that Biden has added 13 million jobs to the economy in 2.5 years. Bidenomics,
On the other hand, you have people that think Bidenomics is bad.
And I really want to be that person that reaches the other side, because Democrats, they're horrible at their jobs, right? They do a lot of shitty things, although I'll vote for them all the time.
The economy is currently deeply divided. And in today's video, I'll explain what Bidenomics is and whether it's been positive or negative for the economy thus far. Additionally, I'll discuss how this has impacted small businesses and investors, as there are some concerning signals we need to address. Let's begin. Let's start with the downsides, the negatives of Bidenomics, because that's how the majority of people feel right now.
The American public is not feeling it. Just 34% of Americans approve of Biden's handling of the economy in a recent AP poll that was released at the end of June. And only 20% of voters believe the nation is on the right track, though voters have not felt good about the direction of the country for over a decade. And Biden is trying to persuade voters that the economy is better than they...
There's a couple reasons why people feel the country is moving in the wrong direction, but arguably the biggest reason of them all is because the cost of living has gotten so much more expensive.
A new report in Fortune says many are cutting back on personal hygiene products like scouring shelves for cheaper toothpaste, and what they say is a troubling sign for the economy.
Just last week, the Bureau of Labor Statistics, BLS, published the most recent inflation report for June, showing a 3% increase. However, the core inflation rate, which is more critical, remains alarmingly high at 4.8%.
They're taking it out of your paycheck right now. The average worker in America last month, when inflation was only 3%, paid about $4.50 an hour in the hidden tax of inflation. Wow. So that's why people can't make it from paycheck to paycheck. That's why people are putting necessities onto installment plans, like groceries.
To give you a clear picture of how much inflation is impacting us, consider this perspective from an economist at the Heritage Foundation. Take your hourly job rate and subtract $4.50 from it, solely to cover the cost of inflation. This equates to $750 per month, or a staggering $9,000 per year in hidden inflation taxes. This is one of the key reasons people are frustrated, because it feels like a deception. When we hear about prices going up, we immediately think of inflation. We're often shown charts indicating that inflation is decreasing, which is partly true. But there's more to the story that's not widely shared with the public. Yes, it's accurate that the rate of price growth has slowed down, but prices have gone up and have stayed high. In fact, prices today are at their highest levels ever, based on official data from BLS.gov. Since President Biden took office, prices have risen by over 16%, and the cost of all consumer goods is up by nearly 17%. This isn't just limited to essentials like rent, food, and gas. It also applies to purchasing cars. In fact, only 8% of new cars on the market are priced under $30,000, making this one of the least affordable times to buy a car in recent history. All of this has had a significant impact on people's ability to save money. For example, in June of 2022, Bidenomics caused the personal savings rate to drop to its lowest level since 2005. It has also affected people's ability to borrow money, because interest rates have risen substantially, creating yet another major issue.
because we've got a real crisis coming here. There's no cash for small businesses. And when the Fed raises rates another 50 basis points, that's going to make it worse. So no, I'm not happy. And I'm in the real world talking to CEOs of small companies that are family-owned in America in almost every state every day. They're not happy either. So I'm not listening to that data. I'm dealing with reality.
Here's a compelling example of someone who doesn't necessarily trust government data and Bidenomics. Despite data indicating that small businesses should be thriving, Kevin expresses a different perspective, foreseeing a significant crisis ahead. The data in question is the Optimism Index, which gauges the current happiness of small businesses and recently reached its highest level in 2023. However, Kevin's argument revolves around the notion that the data doesn't present the complete picture. He argues that it typically takes anywhere from 12 to 18 months for the full impact of higher interest rates to be felt in the economy. The Federal Reserve began raising rates 16 months ago, back in March 2022, when rates were near zero. Now, interest rates have risen to over 5%. If we look 12 to 18 months beyond that point, it brings us to March to September of this year. This time frame is when small businesses are expected to experience the most significant challenges in terms of the cost of capital. Essentially, how expensive it has become to borrow money.
These rapid rate hikes that have occurred, unprecedented speed of these hikes, have put my small businesses, and I'm talking about companies with 5 to 500 employees, which represent over 60% of our economy. You know, if you're in the S&P 500, you have no trouble financing your business. You can't say that about small business anymore.
Jobs, jobs, jobs. The private sector witnessed a big hiring spike last month.
A blowout, upside surprise on the ADP report.
I got 497,000. I got a double take number here.
Companies added nearly 500,000 jobs in June. That is double what economists had predicted.
Guess what? Financial Times and the Wall Street Journal have started to call my plan Bidenomics. Initially, I don't think they meant it with a great deal of respect. With all due respect toward them, our plan is working. It's working. The economy has grown since I took office. It grew faster in the last quarter than anyone expected. And you know, we created over 13 million brand new jobs since I took office. 13 million in less than 3 years. 90,000 new jobs right here in New Mexico. We've created more jobs in 2 years than any president in American history has in 4-year terms. Unemployment has been below 4% for the longest period stretch in 50 years of American history. And not only have we recovered all the jobs we lost during the pandemic, we now have more jobs than we did before the pandemic. Because unemployment's been so low for so long, workers aren't just finding more jobs, they're able to look for better jobs at higher pay. And according to the research survey, job satisfaction in America is higher than it's been in the last 36 years.